All right, what is good? Little trade recap video. Today was brutal. I'm not going to lie. Today was very irritating. One, we took two losses on kind of the same type of bias on the S&P. So let's go ahead and get right into it. Okay, so to start off, on the daily, we were bullish. However, we had these massive move to the upside. Okay. Right, ideally we see more of a retracement down, right, to fill this daily order block, to fill equilibrium as we start seeing some bearish candles on the daily. We then saw, boom, a break of structure on the 4-hour time frame, pretty much confirming a daily retrace, which in turn put me into a bearish bias for the day. Okay, moving over to the 1-hour time frame, prior to market open, we were in a bearish 1-hour marking condition. We marked out liquidity here and liquidity above here, and then this 4-hour order block right here. Okay, so we were marking out our bearish building blocks to look for shorts, okay? And then we also marked out this hourly order block, okay? Market opened and just ripped to the upside, okay? We also marked out the 4-hour equilibrium from this swing high down to this swing low, and as you can see, price is well above that now. Price is in a fat discount. Okay, so the first trade that we ended up taking was off of this hourly liquidity sweep and break of structure. Right here. And this loss should have and could have been avoided. Like, I don't want to make any excuses, but this was just a broker to broker difference. So if we see on this chart, this is why I have another S&P chart right here. If we see on this chart, we got a break of structure right here. If we move over to this chart, we did not get a break of structure here. The lows were the exact same. Okay, the lows of each, the low of this candle was the same as the close of this candle. So if you go here and you see in the like little, all the way up here, see this C? That shows where the close is. Read the close of this candle. Okay, 4443.5. Read the low of this candle, the one with L, 4443.5. So the exact same price. There was no break of structure. And then my Hanko trade brokerage, there was no break of structure. We took a short thinking that there was a break of structure. Stop loss was above here. Instantly get stopped out like 2 minutes in. Very brutal. My buys stayed the same. Okay, we're still looking for shorts, still looking for bearish market structure to form. So, brutal loss on this, loss around $8,000. Moving forward, okay, we have this, okay, we spike into the 4-hour order block, we're tracking lows, then we get a break of structure right here, okay, got filled like right here. Then we get a break of structure right here. All right. We get a break of structure on the other chart. Cool. I was cool for it. Took a short position. Boom. Stopped out. I'm completely okay with this loss. This loss right here, this one over here, makes me not really irritated because you shouldn't be upset about a loss, but it's just frustrating when it could have been avoided. You know, if just because like these brokers were pretty much saying different price points, and this one it seems like was the correct price point because it was in line with my MetaTrader brokerage. So that's kind of irritating. One loss could have been avoided. This one couldn't have been avoided, and I'm fine taking this loss. This one kind of irritating. What could we have done better? Overall, I really like this trade because we had, boom, liquidity sweep to the upside, break of structure to the downside, daily time frame, this thing, the S&P showed boom, big rally up, and then one bearish candle, and then we're seeing break of structure to the downside on the 4-hour. That's showing me bearish confirmation for a retrace on the daily. So I was targeting daily retrace, to equilibrium, daily retrace just to like the fair value gaps within here. This fair value gap probably was the reason for this big rally higher. Okay. And if I'm being real, that like I still have a very strong bearish bias on this, and this will if I'm being real, this probably will have a very similar result to Monday, where we took a trade, maybe just like a little bit too early. Maybe we needed to wait for extra confirmation. So moving forward, I think as we, start to, because we lost today and we lost on Monday. We didn't trade Tuesday. We have 2 more trading days left to resurrect us. And if I'm being real, shouldn't be too difficult. One of my wins should cover all 3 of those losses. On the week, I'm down 17K. Today I lost $13,756. Okay. So I'm not concerned about making this money back. What I should be concerned about is just patience in entering the market, because if we look back on this entire week, first day, Monday, we entered on, just regular entry, liquidity sweep, break of structure, boom, we're in. Today, we entered off of liquidity sweep, break of structure, boom, in. That caused us to lose both days. So how can we learn from this? How can we fix that? Perfect. What can we wait for? Even more confluence. Even if it gives us a worse risk to reward, now I'm going to be way more willing to wait for more confluence, because that's just how this trading week has gone. Okay, there's been a lot of news this week. Markets have had high volatility, obviously, right? Market opened and just ripped. So waiting for more confluence. And what does that mean? Waiting for liquidity sweep, break of structure, order block entry, liquidity sweep, break of structure, fair value gap entry, liquidity sweep, break of structure, equilibrium, fair value gap, and order block entry. Wait, be patient, let the trade come to you. And again, I still think this looks like a very similar day to Monday. I still think my bias is correct, and I still think that this thing is going to end up breaking structure and falling down to at least this hourly order block. Why is this an hourly order block? Because, boom, sweep of liquidity, big rally higher. This is a very high confluence area for price to draw back towards. Also, what's within here? Massive imbalance. So, if we see what price is doing right now, right, we obviously start seeing bearish momentum. We see the bullish momentum slow down within here. We chop up. Yeah, we get some kind of BS price action within here. Boom, break of structure, right? But where would our order block entry have been? Ideally, we wait for price to, boom, come back in here and then come back out of the order block, showing that, hey, orders have been filled. We enter once price exits this order block, because right here, this little bearish candle isn't enough. So ideally, we wait for, price to come out of this order block and then enter. And then that gives us a 1 to 2 risk to reward ratio, which would have eaten this loss and then given us a profit. So that's how we can learn from it. That's the plan going into tomorrow and on Friday. Discord people, let me go over GU and kind of explain what I think is going to happen on here. So on here we have daily, not necessarily, we're not bullish yet, but weekly we're bullish. 4 hour, we're not bullish yet, but the hourly we're bullish. This is what I think. I think we have kind of a Fuzi liquidity sweep up here or it was a liquidity sweep, but it's just going to come down, fill either this, boom, hourly order block. Why? Because boom, liquidity sweep, break of structure to the upside, right? Because the weekly is bullish. The daily, we're hovering right around this daily high. If the weekly's bullish and it's going to continue the trend, it's going to break structure on the daily eventually. So with that in mind, we're not bullish yet on the 4 hour until we close above this high, but we are bullish on the 1 hour. So what is that telling me? It's telling me that, hey, we're probably going to come into either this hourly order block or this 15-minute order block. Probably this 15-minute order block, probably this 15-minute fair value gap. And then what do we wait for within there? 5-minute break of structure, entry, and then long it all the way up until boom. More draws on liquidity. Why? Because the weekly is bullish. Daily not bullish yet. Probably and will end up being bullish though. We can target this daily high, this daily high, this daily high. And then since it's like a weekly trend, you can honestly like target a super long high all the way over here. So if you're in the Discord and you guys are watching this, I'm done for the day. I'm not willing to risk anything more than I already have today, because I know what I'm going to be able to risk tomorrow, and it's not going to be a lot because of news, right? We have all of this, even if we even end up taking a trade tomorrow, and then on Friday, we have a lot of news as well. So Friday and Thursday are kind of days where it's like, all right, I have to be relatively risk adverse while also keeping in mind, okay, we lost on Monday, which was a baby loss, and then we lost today, which was a normal loss. How can we eat that while still being sound in terms of risk management? So that's what I'm thinking of. That's what I'm focusing on. That's what I'm doing. So those were the trade recaps today, along with some GBP USD little, I guess, analysis. Gold. Sure, we can go over gold as well. Gold kind of went over our weekly strategy very, very well, right? What is this? The weekly high. Go over to the hourly, right? I didn't consider this a break of structure. Where is the close? 1925, 11. 1925, 18. I guess it was a break of structure. So you could have entered off of that. Me personally, I just wasn't for it. Okay. But if you guys don't know, this Forex strategy gives you one trade a week. Okay. I have the video posted on my YouTube, but essentially we're in a bearish bias on the weekly. We're in a bearish bias on the daily, severely into a discount on the daily. You know, this is take profit 1, obviously. Take profit 2 can be here. Take profit 3, boom. This order block all the way down there, 1 to 7 RR, freaking beautiful. Like I wouldn't be surprised if this plays out. So there's some gold sauce for you guys as well. Odds that this breaks 4-hour structure, very high. And then what does that mean? Continuation on the daily. All right, so that's kind of what I'm looking at on all this. Let's see what the S&P is doing. Okay, good. It's going higher and higher. If it proves my bias wrong, like honestly, I'll be more happy with that. I won't be, yeah, I just would rather it just completely go than turning back around again. But yeah, there's some Forex markups for you guys for potential trades. Those were the trades that we took today on the S&P. Lost both of them. I will see you guys later today for the bootcamp video. All right, peace.